returns. Do you think that it's important that investors have at least a basic knowledge of whatever they want to invest in? Why am I saying this? Because I've seen a lot of videos going around. One of these banks is coming up with it, is raising up IPOs. And
today, when you look at the top 10 most performing currency in the world, it will baffle you. Because when you ask an average man, they will thinking is a USD,
True.
or the pound sterling,
Very true.
or the euro. But it's far away from it.
Yeah.
When you look at those economy in the Arabian Peninsula, Bahrain, the Qatari, the Oman, the Omans, they are the most, among the, I think, first to seven.
Yeah.
Good day, everyone. Here is the Financial Journey podcast, where we basically talk about money, talk about finances, talk about investment. In a world where you can see your investment erode in minutes, it's important to have a guide to basically assist you and give you the right knowledge you need to keep doing the right investment, making the right investment decisions, making the right finance decisions. And I am not doing this alone like I usually do. I have Obina here. Obina, you're welcome.
Thank you very much, Dan.
So, and today, basically, we are talking about a very, very, very pertinent topic, which is about investment. We're going to be looking at the entire umbrella of investment, and we're looking at whether investment should be primarily smart or it should be large. Because why we are talking about this today is because we've had different conversations in the past with different people that tell you, I can't invest now because I'm not making as much as I would want to, or no, the little money I have is not enough to invest in what I want to invest in. So that is basically why we are having this conversation. We want to ensure that, we want to educate you properly on the smart ways, or is it about the large amount of money you have? What is the correct approach you need to understand in terms of investment? And also the investment space we are in, both Nigerian, local, both foreign investment options. We are going to be talking about everything today, and we are not doing it alone. We have a special guest, Mr. Umar Shehu, who is one of the most seasoned investment advisors, fund managers you have around, and he would be assisting us today in terms of dissecting the conversation around investment. What are the investment products available? What is the role of the economy we are in at the moment playing in terms of choosing the right investment? And we'll be doing this for the next couple of minutes. I hope you join us. Welcome, sir. Mr. Umar Shehu.
Thank you very much, Mr. Daniel.
Thank you for coming.
Thank you for having me
today. So let's dive right into it, and let's just start again with the crux of the topic itself, which is smart versus large. Again, I want you to be able to let our listeners know that what is the difference between the two, and what should be the primary approach of an investor? Should it be smart? Should it be based on the large funds? What is the primary approach?
Well, thank you very much. Like you said, when you look at even the word smart, it means requires some level of intelligence. In an investment, we have people that play a lot of speculation, calling themselves investors. We can get people playing betting, they call themselves investors. But like you rightly said, like one of the others in the person that published Intelligent Investors say, before you become an investor, you must be intelligent enough that will qualify you to be a smart investor. When you look at the dynamics today in Nigeria, basically what is the essence of investment? We are expecting to seed your money with the intention of having a harvest, which is better than what you seed today. It's just like a conventional agriculture. You tilt your farm, you water your farm, you fertilize your farm, then you put the seed. Expect at the end of the season, you get a greener something that you'll be happy about it. So that is the essence of being very smart in doing your investment. And what stands you out as smart investor, don't follow the crowd. Like you mentioned, there's various asset classes. So fundamentally, if you want to invest, what is the essence of that investment? What do you want to achieve? What is your desire? Do you want to invest with the intention, okay, I want X amount of return to settle my children's school fees? Or I do this investment for my children's future? Or am I doing this investment for my retirement plans? Am I doing this investment for my health-related uncertainty? So based on your personal profile as a clientele or institution, that qualifies the essence and the desire you want to invest your money into.
At the same time, I also think that large investment for me is important because in Nigeria, in our space, you actually need a lot of money to start any business. I know smart investment is important, but if you don't have good capital, you can't start most business, even the most basic one like agriculture where you need small funds. Let's say, for example, a fish pond or poultry. You before maybe like 2012 or 2010, you can have 1 million and do something. But even to buy the feed for even the fish these days is a lot. So I feel like people who have large funds have more potential of getting there faster than someone who is smart at the same time.
Yeah. Okay. So what you're bringing up in terms of dynamics now is economic issues pertaining to the value of the money. But before we get there, right, sir, I want to ask you about, there's something you made mention earlier about speculation not being an investment option. But because based on my own knowledge of speculation, it's about analyzing the future price of something, right? So if you are investing, you're probably expecting something to appreciate. Right. So maybe I need to get clarification of the aspect of speculation you mean.
See, when you said about smart investing, which is intelligent investing,
yes,
it differs from speculation.
Okay.
Speculation is just like a kiting.
Okay.
The uncertainty of speculation, you have just been expecting something without a sound base. You know, when you're going to create a structure, from structural engineering perspective or structural, you must clear the place, do the soil analysis, do the all ingredient analysis before you do the base, you build it up to the structure you want. What makes that structure stand out?
With the base, basically, because that's foundation.
You have so many things. You carried a research. You invited a lot of people to ensure that this structure you are putting in place will going to withstand the test of time. So if you're going to do investment, we are expecting you to thoroughly engage what we call the fundamentals of that investment you are going into. Assuming you want to go into stocks or the conventional class of investment class that people mostly used to, whether the stock or the fixed income or the money market or other alternative classes. You need to carry a thorough research to ensure where you are investing have some historical data you can rely upon to design your base so that you can get the fair valuation or fair pricing to avoid mispricing. But in speculation, you just assume. A very good speculation of asset today is cryptocurrency. Okay. People are playing crypto without much basis. Today, even the people with blockchain understanding, blockchain dynamics reality, when you put them forward to give you further clarity on the fundamental of the cryptocurrency, because you have thousands of instruments there today. They cannot determine you that these are the 5 critical fundamentals of this cryptocurrency. Okay, Bitcoin. They are calling it Bitcoin because they say it's gold related. But by the time you try to roll what we call the correlation analysis regarding gold as a commodity with the Bitcoin, I believe you're going to see a variation.
Yes. Of course, I get the point, because for someone, for being in that space, I understand the angle you're coming from in terms of investment, right? So, back to the conversation, which is about smart and large, because
let me say something a bit. I'm my colleague here, Mr. Obenese. You see, large investment is way and manner, the nomenclature, the rhetoric you have chosen to say a large investment. What is large investment in essence?
Just high funds. than
What is high fund?
Let
money.
me give you a
By the
practical.
time you
Yes.
decide dissect a society,
Yes.
let's say into 5 pyramids.
Yeah.
You know, you have financial crisis stage,
Yeah.
financial instability stage, financial stability stage, financial freedom stage, financial independence stage. You have 5 stages. So where do we envisage to get the large fund are you talking about?
Now that depends on that depends on the
That's
on
why I want
the
you
fund manager. Yes, because
That's why I want you to hit.
Okay.
So somebody, you know, typically in macroeconomic analysis,
Yeah.
they say S is equals to I.
Yeah.
Saving is equals to investment.
Yes, true.
By the time your purchasing power cannot allow you to save, does you have the wings and capacities of investment?
Very good.
And that's where I'm coming in. That
Yes.
So
people
in
are
dynamics of emerging economy and emerging market, where you have the bees have almost 80%,
Yeah, 90.
90
Yeah.
living at or below the poverty line. Quantum of calling large fund is a function of many variables.
Sure.
So I could have loved to say smart investment in reality with the fund available. I could have wished the theme of the discussion to be like that.
Okay. Yeah. Yeah.
Smart investment with the fund available. Maybe all I can save is 20,000. And you can't deny me investing in 20,000. The challenge we're having in Nigerian economy today, or Nigerian investments today, we are undermining. I'm a village man. I come from the countryside. It will baffle you. If you go deep inside the village where there is internet today, people are participating in cryptocurrency. They don't care the way and manner the conventional assets are trading before now. Prior to now, especially we that come from the other side of the country, when we talk about investment, somebody will say, that is the crisis of unclaimed dividend that is happening with SEC and other registers in that country. I believe 70% of those unclaimed dividends belong to those northerners that have been forced in the 60s, 70s to buy shares that don't have interest. But today, the dynamic is changing. We are living in 2 data economics. People are getting used to internet connectivity.
Yeah.
They know what the world is doing. The world is a global village and everybody is looking for money. Either your genuine investment or speculative investment. So it will baffle you. Somebody with 10,000 can see how can he change that 10,000, even if it is $1 to buy a Bitcoin or Ethereum or any of the cryptocurrency. So like I said, smart investment, a reality to your money available in your pocket.
Of course, that's why what we're trying to actually do in terms of the conversations is to let people understand that you don't really need to get to where you have a billionaire or a millionaire to actually push it in something. And that is what goes back to the next conversation. The old cryptocurrency, we're going to come back. Of course, they are the latest changes to what traditional investment would look like.
Oh, yes.
You get. So, for you that is actively in this space, right? What is a component in terms of asset classes? What are the components you get of a smart investment as it stands? So, if, for example, I'm coming to meet you, okay, Mr. Omasho, I have 200,000 naira, and I just want to push it into an investment. What are the smart products in terms of you get that the person should do this, and you're good to go?
You see, like I have said before now, your personal profile will determine your axiom of what you are expecting.
Yeah.
You know, timing is very important. Most of investment is tied to certain things.
Yes.
Unless you have so much pool of fund that you are, multiple things that you are doing. Like I've said, okay, I have a project maybe in the next 6 months, and I have 1 million today. I'm going to look at where will I invest that 1 million and get an expected return of maybe 200,000 that can meet up with my demand during that period. Okay, will I do stocks? What is the stock market look like? Should I do money market? What is the money market look like? Should I do federal government securities? Or should I do alternative investment? Where today we have so many,
yeah.
A very good one that is giving results despite the volatility is Forex.
Yeah.
Forex make a lot of people happy. because it's one of the most trending thing in the market. Is giving each.
But does it have the fundamentals we talked about?
Of course it does. The challenge is people, Forex require more study because it's a function of a country.
Yeah.
The manufacturing of that country, the economic activity of that country. So once you take a nation fundamentals, that's what qualify Forex. Today, when you look at the top 10 most performing currency in the world, it will baffle you. Because when you ask an average man, he was thinking is the USD,
True.
or the pound sterling,
Very true.
or the euro. But it's far away from it.
Yeah.
When you look at those economy in the Arabian Peninsula, Bahrain, the Qatari, the Omani, the Omans, they are the most, among the, I think, first to 7.
Yeah.
It's all...
None of them, the dinner, basically.
And when you check the activity based on some data that on a daily basis, 6.6 trillion is exchanging hand in Forex. You realize 50%, maybe or 40 is the USD because it's the most global. People are not looking into those economies that are. And funny enough, those USD, people will exchange them, collect those USD and participate in those markets that not all people can see it. Unless you are seasoned, you understand the fundamental of that Forex. So based on what you want, okay, I'm envisaging the upside potential of X stock can do 15% in 6 months. I can enter it, collect my 150,000 if it's 1 million and go out. Or I want a passive investment. I'm scared of variability. I'm scared of volatility. I want to be very cautious, very conservative. I'll go into money market, offer government security and remain silent. Or I can go buy my mutual fund where it has a mix up of all the assets. Maybe at the end of that period I will get my 10% and go out. Or I'll go into real estate investment because real investment, there is the normal property, there's already real investment trust, which is more like a shares also. Have this on variation in the fundamental concern, the main property and the real investment trust. Or should I go into derivatives?
And that major conversation too,
You see, we that we are living in still emerging economy, that we are not operating in an efficient system, that we are still struggling to align with the regulatory reality, fundamental reality of the market and the economy. Some of the assets we are still lagging behind internationally. Because I can tell you, Lagos is the beast. Everybody knows that.
Yes, of course.
Abuja, Port Harcourt, they are trying to catch up, but no matter how you want to play around. But up to today, when you look at Lagos environment, the derivative is still
coming up.
So we're already used to the conventional asset classes.
The stock is changing.
The stock market, the money market, the fixed income market. Now the Forex is playing a very big space. You can see the beauty of Forex. You can play Forex at the comfort of your offices. But I don't advise people to play Forex as individual. Because it's time bound. If you don't have the expertise, you can easily bond your hand. Despite it has fundamental. But you must know the intertwine, the relationships and how they play around. But a seasoned Forex player that is there, that knows he turn his decks, one is 6 hours, he turn another, he's going the global 24 hours. He knows how the market plays around. So advisably, if you want to play Forex, I advise somebody to look at seasoned Forex player that will give their historical return analysis. So that at least, no matter how lazy somebody is, if he's playing Forex, you realize within 3 months, no matter how lazy, he can make you absolute return of 15% to 30%. When you analyze it, you find it around 25% to 30%, which is much better than even doing 23% of either money market or federal government securities.
So okay, now this brings me to the next question. Because I have meet a lot of these people on a day-to-day basis, and someone just tells you, just take the money, and I'm going to come to Obina to this question. Just take. I don't want to know. Just give me returns. Do you think that it's important that investors have at least a basic knowledge of whatever they want to invest in. Why am I saying this? Because I've seen a lot of videos going around. One of these banks is coming up with it, is raising up IPOs and you get. So I've seen a lot of people wanting to know. You get. So is it even for managers like investors like both of you? Is it a big deal that the investor understands, you get, the basics of whatever he or she wants to invest in? Does it help?
Client profiling is very, very fundamental, Mr. Daniel. It's very critical. Are you doing long-term investment, medium-term investment, short to medium-term investment, or short-term investment?
Most Nigerians want short-term investing.
The short time is a function of duration. In the conventional investment, somebody 1 year is short term.
Yes.
But in Nigeria, they'll tell you 3 months.
Yes.
So 6 months, 9 months.
Do we have an investment mentality issue in Nigeria?
Oh, yes, we have.
Okay.
Yes. You see, the environment, with the exception of Lagos environment, which an average person in the market already grew up in the environment, having the knowledge of investment. Some, they have that notion, okay, I can buy these shares with the intention of it, I will grow with the shares 10 years from now, 20 years from now. Some is medium time they are looking at, okay, I'll save a little in my 100 level so that by the time I'm graduating, I have a capital to start doing my businesses. So the timing is very, very critical, because the timing the axiom of what you want to achieve with the principal and the return on investment. You cannot just give me a money and say, okay, go. Okay, I will go. Because entry of investment and exit of investment is very critical. Assuming now you just give me 1 million, you say, just go and do. And I look at 1 penny stock. As a private placement or quoted company, I place 1 million there, thinking, I believe the penny stock have the potential of 1,000% return in 5 years. Then at the end of the year, I come and say, I want that money. You have already distorted everything with me. That is why service level agreement between investment person and his client is very important. So that in the event, even when there is need of duration distortion, we say this is what we agree. Because that's why you do asset allocations.
I think in our own space, like the Forex space, a lot of people are just interested in 3 months. They just, let's say, for example, someone puts in like $500 or $1,000. He's interested in, okay, what am I getting at the end of 1 month? If that return is not up to 30%, to him, he's not interested. But the conventional way it's supposed to be done is long-term approach, not just in Forex. I'm just talking about investment in general. That we are supposed to be looking at things in terms of 10, 5 years, or at least 1 year.
Minimum 3 years.
Yeah. So we need to now understand, okay, how best to help the investor so that we can merge his own needs with the real issues. Because if you want to just say you are fixed on, okay, let's have a 1 year agreement, your client base will just reduce. You have very few people, but those few people will be very important people at the end. But the bottom line still brings the fact that we're looking at how someone who is just starting, maybe the person just has 200,000 naira, or the person has something that maybe just finished from school, he has saved up to 500. What can he start with? And like he was saying, you need to also include the duration. How long do you want to hold that investment for?
Okay, because the reason why we are actually going around this conversation, because like you said earlier, investment is a function of savings, right? But because inflationary pressures and so many other economic issues has pushed a lot of people, including Nigerians particularly, to a point whereby I'm just looking for something that I can put a certain amount of money and I get a return on a monthly basis that gives me the income or kind of income I get on a monthly basis. So, for example, someone maybe makes 200,000 naira a salary you get and believes, okay, if I can, let me look for something that can give me 200,000 monthly. I can put maybe 1 million or 2 million, and I'm expecting that an investment, like an income that comes in on a monthly basis. Because this particular conversation didn't start like this. Yeah, because I know that growing up, as in they will tell you to buy shares because you are holding for years. Yeah, but after a while too, you realize that some of those shares eroded over time. So this generation growing up now is like, no, it has to be. So that's for me is what even brought up this whole rave of cryptocurrency. Because the idea now is it has to come in immediately. So as someone that is in this space, what is that conversation you have with people, especially after the profiling? Because profile and you say, okay, this person actually is not ready to be patient for a 5-year conversation. What are the conversations should you consider that risk conversation? What are the kind of conversations you have?
When you look at the international space, Europe, America, and other places, the investment managers, when a person approach a firm that want to do investment, they will flag up all the likely risks in what you want the investment to be. But if you have been choosing just to give them the money, you just give them, okay, I'm expecting X return. They will tell you that our historical achievement over the years, if you are keeping your money with us for 1 year, we can guarantee you 14%. If you are keeping your money with us for 2 years, we can give you X amount. So there you don't mind what they are doing the money. They are the one to do the risk return analysis, to know how to protect the fund, to do all the risk mitigant, and ensure they return to you that principal plus the return on investment. But, like we said, Nigerians, we play more of speculation than investing. Because basically, like, I keep hitting on the crypto and even the Forex, that somebody will come and say 3 months. You know that in 3 months time, the dynamics. You have,
it's uncertain, yeah.
So because when you look at, let's just digress a bit, when you borrow AI in today's reality, AI algorithm and investment, aided in historical things to establish data. That data you establish will going to give you, okay, it can extrapolate to say it can achieve X and X. Things that just operate within 3 months. Let's assume maybe the company just started. And based on their historical antecedent from their various experience, they know they cannot do more than X. You put yourself under pressure as the investor and you put the company under pressure. Unless otherwise space like Forex, where they know it's a daily thing in and out, they know their onions, they know how to play it, they know when to enter and they know when to go out. Because I have never had yet most of the serious registered Forex company that burn their fingers in this country. I'm yet to hear an information where a Forex firm that is trading over our people are closed down, unless they don't have serious managers. It's more of speculative business, but there is some protection layers. The risk is manageable. Worst case, maybe you cannot get the expected return of that ambitious 20%, 15%, but you can get 6%, 7%, especially if you're very lucky to get a conservative Forex manager. He must return something for you if he knows what he's doing. He can't allow the money to be eroded. But the only challenge is a volatile environment like Nigeria, where at times the royal rumble between the dollar and the naira with the physical and monetary interplay can come up with something overnight that can distort the whole system.
I'm still coming back to this particular investment conversation, particularly when it relates to risk. But before then, as it stands, Nigeria is on a negative real rate of return in terms of interest rates to inflationary pressures. So if an investor is coming, maybe as an investor, probably someone listening to us right now, and you're like, how much you get will be the right amount, because right now it's almost 10% in terms of the negative interest rate of return. So that means that if an investment is not giving me more than inflationary pressure, 35-40% annually, that means it's not helping you get me, whether short term, medium term, or long term. So then it now goes back to the risk you get, because for every expected return there is a risk, right? So how can an investor listening to us right now says, okay, what is the pointers in terms of risk conversations I should have with my investment manager or a fund manager? What are the things what are the questions I should ask in terms of risk conversation, and what is the response I would get that gives me a guarantee that, okay, yes, the risk is manageable for me?
You see, each and every asset class have its own risks. Each and every economy have its own risks. So let's go back to the investment classes. They say the higher the risk, the higher the return. Like you said, functionally, there is these two return issue: nominal return and real return.
Yes.
And our listener may like to know what is the differences.
Exactly.
So I believe, based on your analysis, you just assume the NPR is around 26 and something.
Yeah, exactly.
Inflationary is around 34.
Exactly.
So by the time you make the reduction, there's a discount of 10%.
Yes.
So where will you get close to 1,000 bips to cover? And the essence of any investment is to hedge against inflation.
Yes.
So you can see Nigeria for ages, there is mixed reaction in the economy. Some of the years, some stocks close above those inflationary figures. Because if you are going to X-ray from January to date, some equities have already returned over 40%. With the current corporate action that just came out from April, that just been Boa, Dangote, you'll be shocked. Some of the profit those people, I was just reading yesterday, they are saying Boa have returned over 130 billion in one of his companies. So by the time you look at the EPS and look at the yield return, it will baffle you. The shares from opening of the year to the current price, the upside potential is maybe almost, this shares return for over 40%. So you can see that shares has done 6% above inflation. So by the time you put on your lenses and peep through the market, especially the stock market, you can identify some stocks that are doing well, that can give you the real return above the inflation you're talking about. But the conventional on March return on all the federal government security, none of the federal government security is doing 30%.
Yes, exactly.
Irrespective of duration. 30 years paper, 20 years paper, 5 years paper, also in paper. The class of 3-month treasury bill, 6-month treasury bill, 9-month treasury bill, 1 year paper of treasury bill. Same thing when you go back to corporate entity. They are commercial papers.
None. I've not seen any this year that's even promising about 20%.
By and large, if you exclude the banks, what is the maximum are they giving for savings account in their money market space? Are they giving up to 25%? But how much are they charging? What is the overnight rate currently? The Nigerian NABRO, Nigerian interbanks rates, 90 days. Even within the institutions, you can see we are operating below the real return. But that's how we find ourselves as an emerging economy. That's why we remain underdeveloped economy. The inefficiencies in the system does not allow us to do a lot of things, no matter how we want to do it. But we are trying. Despite there are some regulations, but there's so many uncertainties that are not favoring the system to produce the expected desired result to investors. So investment managers that knows the system, they are the people that are managing the system for the betterment of everybody to ensure you as investors are happy and they as the managers are happy also, so that they can keep the body and soul together.
Mr. Obina, so I want to ask you now because, of course, that what you just told us is the Nigerian market, money market, and everything, right? What about the FX space where you operate? How does the risk management approach work? You get, because either ways, right? Everybody is looking at options. You get, when you look at the conventional option, you also want to look at the alternative options, right? And I'm still coming back to that crypto conversation because before we round up. So how, you get, is risk management like? You get, in terms of what do you communicate to investors in terms of risk management, and how do you actually carry it out?
All right, so I'll talk about my own space, then go back to his own space. But in the Forex space, one thing that we always consider, he mentioned it before, you profile whoever you're giving your money. You need to see a track record that year in or month by month, this person or this person managing the fund, whether it's a hedge fund or a body that you are giving to handle, is making returns. So even if the person is making, let's say 5% or 8%, but you want to see that he is consistently profitable. We are not saying that the Forex space is not risky. There's a lot of risks, but you need to be sure that whoever that is handling your fund is a professional. He has a track record that you can check. It shouldn't be how most people do it, that because they know you or they trust you, no, this person has been in this business for a long time. So they just, if you say he will give him 30% monthly, you just bring out money and give. No, you're supposed to first be sure that, okay, what is your track record? How long have you been in this business before you give someone? Then when it comes to drawdown, when it comes to, okay, how exposed is my fund, is it needs to be clearly seen that, okay, what we do in a year or what we do is that the maximum drawdown you can face maybe is like 2 or 3% of your account or this. But the client needs to be sure of the fact that his money is being protected, capital is safe. He also needs to be sure that he's going to get consistent returns, and he also needs to be sure that, okay, I want someone who is conservative, or I don't mind someone who is going to handle the funds and is a high risk taker. He needs to be sure of these things.
And even now, I think that there are applications like softwares that now help even in protection in terms of putting threshold on those funds. So I
want to say something.
Yeah.
You know, what he said just brings everything together.
Yeah.
There's someone who has money and wants to look at the options given. He has the Forex space, he has the money market space, he has, like he mentioned, this one he mentioned, I can't remember. Then he also have alternative. What I'll say is that for a Nigerian mindset, so because we have our own local environment, someone who wants to be, let's say Mr. Sule wants to bring money now and he's looking at, maybe he wants to start with $500. In the short term, if he's looking at just short-term investments, then he's looking at Forex. If he's looking at something that is a bit medium, that he wants to hold for a longer term, then he also needs to think about, okay, am I ready to risk more, like in the Nigerian stock market, so that I can have good return? Like he was mentioning, Dangote Boa are having better returns than what you have in the money market. Money market is our banks where they give you fixed deposit and all that. So you need to even ask yourself, okay, the other question, like you mentioned, is, am I that kind of person that is a risk taker, or I'm conservative, so that I can put my money in treasury bills and be okay with the small interest I'm giving, or I can put my money in money market banks and be okay with that amount? Or am I also a more like I want to take longer years? That's where those shares come in, because I don't think you should be getting bank shares for just short-term purposes. When different, I don't want to call banks names, are bringing out their shares, say, we're releasing this billion amount of shares that people should come and buy it, and the last one people bought and it didn't go well, but because of the mindset about investing they have. If someone wants to buy shares today, he has to buy it for the long term. He's not buying it for, okay, I want to buy so and so bank shares just because I want to make money in 3 months or I want to make money in 6 months. Like he mentioned, if I'm a student in year 1, I'm thinking about when I finish school year 4. So that whatever I get out of it is what I want to use to do a business or something. Or if I'm someone who is trying to get money for my child's school fees and I just gave birth to my child, I can buy these shares and know that, okay, I'm holding it for 20 years and so on. So these are things that people who, depending on where your money is, if you are 200 naira person, if you are 1 million, you need to know, okay, which options, and this is where you need to talk to someone investment space so that they guide you properly.
So talking as I was talking about these options, I now remember that what about alternative in terms of locality? What about non-Nigeria, European options, or even the New York Stock Exchange? Or sorry,
talking about derivatives.
I'm talking about derivatives and every other investment product available across board. Because at the end of the day, globally, because at the end of the day, you want to hedge your bets because investment is not emotional, right? So.
Mr. Daniel, point of correction. You say like Obinabed mentioned, Nigerians were funny. At times it's emotional. Yes, like you gave an example.
Yeah.
I'm Mr. Paul. Mm-hmm. I realize he's under pressure. Okay, carried 500 million, manage it, at least to save your job. But that does not. In investment reality, you try to hedge that money so that money can grow. But in every investment space, fundamentally, what is essence is safety of the investment. Safety of the investment. Then the appreciation or the return you are expecting. Right? So when you look at the international space, the most common instrument within international space is commodity.
Crude oil, gold.
Even those things you are undermining of your grandfathers. The cocoa farm, we abandoned. When you check the price of cocoa, it will baffle you. When you check, do you know honey? You say crude oil, the brand of crude oil is how much? So when you see the price of brand of crude oil, one barrel of honey, it will baffle you. Do you know honey barrel is more expensive than crude oil?
How much is it today?
No, it is only normal, right? Because investment pricing or anything financially is a function of the availability of the supply of those.
When you look at international space, they look at Nigeria, they sympathize with us. We have been blessed, we are abandoning so many things. A lot of nations are looking for where they can do this honey farming. When you take 10 barrels of honey, it will baffle you. Don't talk about other alloys, other lithiums, all those commodities we're having in abundance because they have
cassava.
Of course. So the commodities internationally plays a very good space. So in Nigeria, you have advantage of, you can play it locally.
Yeah, play in terms of the,
because
and also
what differs them is the quality and the grade. For the serious-minded people playing commodity, if I'm into those gold, lithium, or other precious metal, by the time they've been excavated, passed through the normal processes, they keep them into standard. The first grade 1, 2, 3, international, the local, we use it local. Same thing with the agricultural produce. By the time you maybe coffee, cocoa, cotton does these serious product, the first grade go internationally because there's always demand.
Yeah. And because you make earnings.
That is where you get your exchange rate. You export, you import, you call what you call balance of trade and balance of payment to get your exchange. So international space that is common to people is the commodity, where you meet at the international platform and exchange it. But you cannot expect a local farmer here that produce to start talking to him about stock. Stock is for white collar and blue collar people like you in the offices. that they have to start studying the fundamentals. Now, even the experienced people, some, they have the ability of investing internationally, but they're still scared because they don't have the knowledge. One, because the volatility of the exchange rate. At times, let's take example of Apple shares. The time Apple was quoted, a lot of Nigerians, few Nigerians that invested into Apple, today they are smiling.
Yeah, sure.
Because that time, there was stability of Naira against dollar. So, look at where dollar it is today. Maybe you invested where that Apple was not up to $100.
Yeah.
So imagine how many percent? 1,000. 1,600%. Since dollar is almost 106, 1,600. So that is on the FX parity alone. Don't talk about the appreciation.
Returns.
So by the time you sold, you sell maybe around 2,000% return. Tell me, what will it going to give you that? So up to today, a lot of people that have so much money in their hand, they don't think deep and start thinking how can they take the advantage of the international space, which is very, very important. Because if you have much money, that large fund you're talking about, to me, it's better for you to open your eyes very wide, get a trusted broker or financial advisor that understand the dynamics of that efficient system. Because they're living in an efficient system. When you look at, okay, let's look at Euronext, where like 7 most European active nations are operating, or London Exchange, or Paris Exchange, or Germany, or you look at Asia, you look at China, Taiwan, Hong Kong, Singapore. Why would baffle you? Even Tehran, Iran, they have been quoted on the Asian. And when you come to Africa, before now, Nigeria is a major destination. You talk of South Africa, you talk of Egypt, you talk of Kenya, you talk of maybe Algeria and those North Africans. So what matters in those kind of international space investment is the currency volatility. It's something that requires you before you become an arbitrage, because you want to take an advantage in another space which you don't have knowledge. How sure are you? Yes, I am guaranteeing 10% of that shares, but by the time you're coming in,
it's way more.
Where will Naira going to be? Will it appreciate against the dollar? What will be my faith? So many